Hey, what's up, everybody? Thank you for joining me. I'm Curtis. This is part 4 of my Breakout Stocks series. So thank you for joining me. We're going to cover today NewEra Energy and Nokia. So stick around for that. But before that, right, today was a tough market day. The trend of rotating into safety stocks due to oil in the Middle East continues. I mean, this has been several rotations in a row already. Although a strong earnings season and future guidance can drive risk on sentiment to continue buying and driving stocks closer to their targets based by analysts, I think the smart money institutional buyers don't want to be caught in that uncertainty just in case earnings underperform. It's typical that by this time they've already positioned for earnings, but that has evidently not been the case with continued rotation and, of course, lots of money on the sidelines. I mean, I believe last I checked, on the sidelines with the ICI money market funds was $5 billion per week, week over week. So you know they're saving it for a good opportunity to dive into discounted growth stocks, specifically during a period of more certainty, particularly in oil, inflation rates, and the Middle East. And I think for now, the trend of buying and rotating into defensives, as well as uncertainties of oil and Middle East conflict, if we have a strong earnings season, I think it's going to be a tailwind effect. So if you're considering buying, just keep that in mind. Nonetheless, I still believe the smart money institutional buyers, the large funds, can't resist accumulation opportunities, specifically when the dips are very low like the way they've been, and of course the way that they were today. I wouldn't even be surprised if they moved in on it in the coming days as well, just to rotate back out, back again into safety. But ultimately, what I'm saying is that we must account for that in our investments and, of course, our trade styles, and provide myself the advantage of not falling into these cyclical traps of that roller coaster that's been happening in the past few weeks here. With that being said, I want to remind you of what Charlie Munger would say, which is the market doesn't reward the clever, okay? It rewards the discipline. Stay disciplined with your investments. Be mindful about how you make your moves. If you're stuck somewhere, remember, time's your friend, right? We don't have to report every quarter. We don't have clients breathing down our necks. We have the advantage of having a long runway. You've got a long runway. Use it to your advantage. So let's go ahead and dive right on in. All right, so the first stock that we've got here is NewEra Energy. They closed at $88.38. This is the 1-year view, and they had started last year, about a year ago, roughly at the $70 range. Came up to a high in May in the mid 90ish, and started coming back down, a little bit of profit taking and cut back right there, pull back right there on the consolidation. Still looking pretty strong in my opinion. If we move into the analysis, we have a consensus of buy rating. 8 bullish, 4 neutral. That's 66% on leaning on the bullish side, 33 neutral, and none on the bearish side. And then if we scroll down here, if we look down here, we've got Bank of America with a rating of $93. Seemed like they dropped it from 95, dropped it a little bit just today actually on 7/13. And then we have Barclays, have a couple of ratings here in the 90s as well. $91 here, $90 here, up rating, of course. And those were in July and in May. And then we got Morgan Stanley at $115 back in May. JP Morgan, $100 and $105 back in May as well. Evercore, $107. So it's pretty much on the bullish side right now for NewEra. Now, if we move into bar chart, this is where we've got their options information. And if we scroll down, their implied volatility, 25.99%, looking pretty good. Not too volatile on the options side. Their historical is only at 20% as well. And then their put call ratio is at 0.81. So more call options right now set up than put options, still leaning slightly on the bullish side. If we scroll back up, we'll see their daily trading volume, which the average is at 12 million. Today was only at 6 million, so cut roughly about half. If we move into this article right here, I'm going to read a few bullet points for you all from this report that came out a couple days ago, July 11th. NewEra Energy merger with Dominion Energy introduce risks. NewEra Energy proposes an all-stock merger with Dominion Energy, aiming to create a $250 billion utility leader amid surging AI-driven electricity demand. NEE expects that the scale from the merger to accelerate project delivery and efficiency, especially in data center heavy regions like Virginia. The deals takeover premium and regulatory concessions set a high bar for synergy realization amid integration risk. NewEra Energy's historical outperformance is rooted in Florida Power and Light's favorable regulatory environment. The merger could dilute this competitive edge. I would imagine that NewEra Energy already understands the situation that they're putting themselves into. They've already prepared before they even moved into that merger to try to gain some of the synergy and realize that synergy with the merger. And of course, the surging AI-driven electricity demand, right? I mean, they see that they've got to move into that, and they see the potential there, and that's what's driving their growth right now. So let's go ahead and read one more real quick article right here from Zacks. It says, will NEE beat estimates again in its next earnings report? This one came out today, July 13th. And it says right here, looking for a stock that has been consistently beating earnings estimates and might be well positioned to keep the streak alive in its next quarterly report. NewEra Energy, NEE, which belongs to Zacks Utility Electric Power Industry, could be a great candidate to consider. This parent company of Florida Power and Light Co. has seen a nice streak of beating earnings estimates, especially when looking at previous two reports. The average surprise for the last two quarters was 6.56%. With this earnings history in mind, recent estimates have been moving higher for NewEra. In fact, the Zacks earning ESP expected surprise prediction for the company is positive, which is a great sign of earnings beat, especially when you combine this metric with its nice Zacks rank. So pretty bullish from Zacks. They seem to be bullish on this energy company. And of course, that's one of the anticipated bottlenecks as well, right? Which is the energy, the power. We're going to need more of that to deploy AI for the long run. Now, if we move into the trading view chart right here, this is going to show us exactly what the technicals are telling us on the charts, right? No opinion, straight charts, straight data right here. And we've got the 1 year view pulled up. I'm going to go straight from bottom to top. The bottom is the MACD, which shows us it's the moving average convergence divergence. Essentially, it tells us whether it's on an upward trend or downward trend. And right now, the blue line, which is the MACD line, is hovering over the signal line, and it's on top, so it's moving on an upward trend. If we take a look at this green line right here, that's the price line. And right now, it is sandwiched in between the 100-day moving average, which is this pinkish reddish line, and right above the blue 25-day moving average. And while it's sandwiched in between the 100-day and 25-day moving average, it appears to be making its way back up, consolidating. And of course, we can see that with the relative strength index, the RSI up here as well. The relative strength index is telling us whether it's being overbought or oversold. Right now, it's at the 53 range, which means that it's in the neutral. If it's roughly in the 70-ish and moving upwards, that's the oversold, overbought side. And then if it's 20 or below, that's on the oversold side. So, for example, if you take a look right here, right, it's at about the 29-ish. It was being a little bit oversold. That's what had created this dip right here. In fact, it's the oversold momentum going downwards. That's what had created this right here. And then as they start to buy, it starts to move upward on the relative strength index, and that's what we get right here as well. So if it continues to move up in that relative strength index, you know that it's got more buyers than sellers, and that's strong, good momentum. Now, we'll go run through real quickly the 6-month, 3-month, 1 month, and 5-day and the 1-day view, just to give you all a holistic view and idea on how NewEra Energy is performing, because you can't just isolate your analysis to one chart, right? I mean, you've got to take it as a whole and get an idea of how it's performing as well as how it fits your trading style. I mean, are you going to be trading long term? If that's the case, you might want to look at the zooming out at the longer term view. If you're a day trader, if you're trading on a more regular basis, swing trader on a weekly basis, you might want to be looking at that 1-day, 5-day, and that 1-month view. So let's take a look real quickly here at the 6-month view. Go down from the bottom, from the MACD, all the way straight up to the RSI. So MACD is still above the signal line, upward trend. We have the price line, which is above both the moving averages, strong momentum. That's what it's telling us for the 6-month view. And then, of course, we got 58. So that 58.59 is moving towards the overbought spectrum, telling us that there's more buyers, right? That's good momentum. Now, If we take a look here at the 3-month view, it's MACD still above, looking good, upward trend. Price line still above the moving averages, upward trend. And then, of course, the RSI has jumped up a little bit to 60, so it looks good there. We look at the 1-month view, we have 0.23 on the MACD over the signal line of 0.20, upward trend, and it's represented by this price line right here. As you can tell, the price line is nicely well above the both moving averages, the 100-day moving average in the pink and the 25-day moving average in the blue. You can also tell because the pink, it has a price right here. That's the $87.78 for the 100-day moving average, $88.08 for the 25-day. However, the price is actually above at $88.40. So that's stronger momentum right now. Then we've got the RSI at 58.58, still leaning a little bit more at the oversold side, even though it's closer to the neutral right now. But if we take a look at the 5-day, this gets us closer to what's happening most recent. And if we take a look, the MACD has dipped below the signal lines, and we have the price line still kind of sandwiched in between the 25-day moving average and 100-day moving average. Still looking good. The momentum still kind of riding on top of the 25-day moving average for the most part, and that's what you'd like to see. And then we have here 45, a little bit more on the selling side right now, maybe a little bit of profit taking in the past few days here. And then this is the 1-day view. 1-day view, we have a downward trend on the MACD for the 1-day view. Of course, you can tell because you got the price line over here and it's starting to come on downwards over here for just today, of course, today's trading. And the price line is actually below the moving averages. So today was, of course, a more moving towards the bearish side, and that's represented by this 47.31, more on the oversold side, slightly still in the neutral, but slightly more on the oversold side. So that's what NewEra Energy is showing us. I would say, considering the 6-month, 3-month, and 1-month, it's still on a bullish trend, especially if we zoomed out 1 year ago. You can tell, right? It's making its way up. It had a high at $98 here. It dropped back down, but it's making its way back up again. And you can tell with the 6-month, 3-month view that we've got some good buying right here, and that's what tells me that there's interested buyers, interested investors trying to move in on NewEra Energy. Remember, they have their earnings call coming up in the middle of this month. I believe it's on July 24th, so keep an eye out for that. That's going to be an earnings catalyst. Of course, be mindful of the buy the rumor, sell the news as well, and don't get caught up in that. Just be mindful about how you trade there. If we take a look at the 1-month view, and you're probably going to be asking me why I like this stock, and it's pretty simple. I mean, if we take a look, we have this V-shape coming back up here. I would say at least for the next for the oncoming days, going towards earnings, right? I mean, there might be accumulation, might be a build up there, but for the most part, I like the fact that. Let's go ahead and zoom into it. If we got the 7th here, and they were at about $88.90. They dropped down. The 8th, they were at about 80. They closed at about $87-ish, and then on the 9th, they dipped down even more, closed at $87 in the low $87. However, they're making their way back up. Okay, so that was 3 straight days coming down. And then Friday on the 10th, they started making their way back up, closed at about 88 cents, which is higher than their July 9th close. And then, of course, today on July 13th, the first trading day of this week, they closed at about $88.40. So that to me says that they've got momentum rising up. It's reflected by this RSI as well. You can tell, and it's similar to something like this down here. If you take a look, we've got the bearish oversold right here at about the 30s, and then it makes its way back up to in the high 60s. Does come back down a little bit, ends up in the 70-ish right there, but that's what I'm talking about. It's going to make its way back up, and hopefully it gets up to the 70-ish where you can actually capture a little bit of gains there. And then on top of that, I mean, if there's 3 straight days of climbing up after 3 straight days going down, you want to keep an eye on it to see if they have a little small gap up, and that could be an opportunity during the earnings catalyst as well. So keep an eye on NewEra Energy for those reasons, and that's exactly why I like them. Now let's move into my next stock here, which is Nokia. I like Nokia a lot, although they're going through some challenges right now. Of course, you can see this dip coming back down here, especially if you've been keeping an eye on Nokia. But the main thing is fundamentals are intact. Their long-term outlook is still intact, right? Their AI, bringing the data centers to the cell sites closer to the consumers, all that stuff is still intact. There hasn't been a negative catalyst to Nokia yet. And then on top of that, remember their earnings call is coming up sometime this month as well. I don't know the exact date, but maybe we can look at it as we move into Nokia. So we've got Nokia here. I'm going to pull up the analysis, and if you can tell, right, we've got one bullish, not a lot of ratings here. We've got JP Morgan appears to be the only one who's rating them. $21 jump from $14, and that was back in back in mid-June. So JP Morgan quite bullish on Nokia. Let's move into their options, see how they're looking. So they've got a pretty good volume. If we take a look at their average volume trading, it's at 91 million. Today was at 103 million. A lot of selling there, a lot more on the bearish signal, unfortunately. But if we scroll down, let's take a look at their implied volatility, 79%. Pretty decent large swings that could potentially happen. We do have a decent, real good put call ratio at 0.20, which tells me that a lot of folks playing the options are a lot more bullish than what the volume is telling us right now, especially with this right here, the overselling of today. And that, of course, also happens because of sympathy trading, right? I mean, you think about all the semiconductors, the memory chips coming back down, and then on top of that, you think about the oil, driving the cost of oil going up, 10-year yield going up, inflation, potentially outlook going up because of oil going up, and then of course the uncertainty with interest rates more likely on the hike side, although we're not sure, especially with Kevin Warsh finally getting his opportunity at the helm right now. So let's take a look into Nokia. Let's read what Yahoo Finance AI has to say about Nokia. Okay, I'm going to read this portion right here for us. Nokia's recent developments include a significant drop in FMR's LLC holdings and a new partnership with Nest AI to enhance AI-enabled defense capabilities. Valuation signals are mixed, with some analysts suggesting potential undervaluation amidst market volatility. Recent developments: Nokia has entered a partnership with Nest AI to develop AI-enabled defense solutions backed by a 100 million euro investment. This collaboration aims to enhance military operations using Nokia's 5G technology. Market performance: Nokia stock has seen a 20% pullback in the last 30 days, despite a significant 141% increase over the past year, highlighting volatility amid mixed analyst sentiments. So let's jump right into the charts and see what it tells us. And we'll go right from the bottom up to the top. I'm going to pull out the 1-year view here. And as of right now, the MACD has dipped down pretty hard, definitely represented by the price drop. And it is the MACD line is below the signal line, so downward trend. However, the price line is still in between the 25-day moving average and the 100-day moving average. We'll see what happens there as Nokia tries to find a floor and see if they make their way back up. And then, of course, we have the oversold side on 39 with the RSI, and it's represented by this RSI moving downwards. More sellers than buyers right now for the 1-year view. For the 6 months, the MACD is still slightly above the signal line, upward trend for the 6-month view. We have the price line, which is below both the 25-day moving average and the 100-day moving average. We can tell that there was upward momentum right here, and then it started coming down below the blue line. I'm talking about the green line, which is the price line, below the blue line. So that's downward momentum, and it's reflected by the selling at 36.81 for the RSI. So that's the 6-month. 3-month, we have similar with the MACD down below, price line below the moving averages with oversold on the RSI. We'll take a look at the 1-month view. Same thing here with the MACD. Price is well below the moving averages, but keep in mind that when it's below the moving averages, it will want to try to make its way back up to the mean as well. And then on top of that, we have the overselling right here at the 32.98 for the 1-month view for the RSI. We move into the 5-day. the MACD starts to improve a little bit, and it's barely riding right on top of the signal line, which is a more upward momentum, bullish sentiment moving in there. The price line is right pretty much at the 25-day moving average. We'll see if it makes its way back up to the 100-day moving average. I would say that once it gets to that point and starts riding on top of the 100-day moving average, that might be a good opportunity to climb in on upward momentum. Maybe something like this right here. That's what I'm talking about. So if it's down here below the 25-day moving average, but it gets up to the 100-day moving average and it starts making its way up higher, this is where you want to kind of capture it for that momentum gain. And then, of course, the RSI looking a little bit better, although still on the oversold side. Improved from going from the 30s of the RSI into the mid 40s now. Let's take a look at the 1 day. And with the 1 day, we have a neutral of about 51 on the RSI, improved from the 5-day. And then, of course, we have the green price line sandwich right in between the 100-day moving average and the 25-day moving average. The MACD is kind of, kind of even between the signal line, but still slightly below. We'll see how that turns out. All right, so now the question is, why do I like Nokia, right? If we just back out and zoom out a little bit to this 3-month view, we have Nokia. They came down from a high in the $17 range. That's where there was a lot of hype with Nokia, especially about the AI build out, bringing the data centers closer to the cell sites. And the long-term AI outlook for Nokia looks fantastic. Again, it's still intact, and that's one reason why I like it. Okay, but however, if we take a look down here, I mean, they're coming back down to this mid $11 range, and they're starting to kind of try to consolidate down here in this area. Once they find a floor and start consolidating, because their fundamentals are still intact, because it's not just Nokia that's getting hit right now, it's a broad-based AI world getting hit right now, not just AI but other stocks as well. And then there's that sentiment of the sympathy selling with everything that's going on with the semiconductors, the memory chips right now. It's a broad-based sell-off and rotation, not just affecting Nokia alone. So that's why I'm saying that keep an eye out for Nokia. Once they start consolidating, they have a real good opportunity to climb up, and of course the earnings call can serve as a catalyst for that. But before that even happens, keep an eye out on the other earnings call that comes out prior. Okay, I mean, I'm talking about Taiwan Semiconductors and other anchor stocks that can really have a strong effect on Nokia. So just my 2 cents. At the end of the day, I find that Nokia at $11 right now is a real great discounted price to move in on them, regardless of this short-term moving average right here. I mean, it's still, I mean, to me, in my opinion, not financial advice, still a great buying opportunity. I think that it's at a spot where it's going to consolidate, because a lot of the investors are not going to want to miss out on this opportunity to move in on this discounted stock price right now. On top of that, a lot of DCA accumulation as well that may start happening, especially if you take a look at the 5-day, and then of course the 1-day moving up with the RSI as well. So keep an eye out on that for Nokia. Again, not financial advice, but with these two stocks, NewEraEnergy and Nokia, these are reasons why I like these stocks, and of course I just wanted to share it with you all. Keep an eye on them. I'm going to keep an eye on them as well, see how they do. Maybe when we get the results back from them in August or so, I'll come back, pound on the table, sharing that information with you guys as well. So click that like button for me. Click that subscribe button for me. Drop in a comment. Any questions you've got, drop it into the comments too. Make it a great day. I'll see you all next time.